Welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec, on Monday the 20th of May. We have had some swings on markets actually today. We had earlier on some fairly positive sentiment, but that's now gone into reverse. You can see equity markets broadly lower. These S&P 500 futures, for example, were 0.3% higher around the turn of the European session, and they're now trading lower. And that's come as the positive risk appetite elements to the better than expected Japanese GDP, the surprise victory for the Liberal coalition in the Australian election, and also the suggestion from the PBOC that they weren't going to be letting the yuan weaken significantly further. The positive aspects of that has been undone as suggestions or unverified rumours that the trade talks between the US and China were breaking down. So we have had a reversal of that. We've seen bond yields which were higher. They've now unwound some of that move to retreat back lower again. We've got equity markets which, as I said, are trading lower now on the day. The DAX and the CAC are certainly driving that move. And yeah, the gains that we've seen in these markets have basically been undone. So if you look at how the US dollar is doing, it's a little bit weaker actually against the commodity currencies. That legacy of these earlier Australian dollar strength is still in the market. But generally speaking, we've seen a sort of a retreat in risk appetite. Now, in terms of data points today, there isn't any key economic releases due. You do have the central bank FOMC's Richard Clarida, who is a vice Fed chair, and his sort of border centrist really, but it fairly much follows the views of Fed Chair Powell. So he's always an interesting one to watch out for. He's speaking at 6:05 UK time this evening. But my chart of the day is dollar Swissy, which, as I said, the risk appetite has just retreated a little bit, and generally that tends to be a driver of Swiss franc strength, which has again pulled the dollar Swissy lower. But up until that point, we'd seen quite a strong recovery move in the dollar Swissy, and if I zoom out here, you can see that this is basically just a retreat back to that uptrend, which I think is a key level that the market has been looking out for. You can see here on the daily chart that sort of 35 to 40 on the RSI tends to be an area where the buyers come back in. You've seen the MACD lines retreat to neutral, and the stochastics have turned higher. So this is an uptrend that is important, obviously, here, in the reaction lows that we've seen in subsequent sessions, all pulling successive daily higher lows. So Friday's low of 1.0080 will be watched as an initial support, but then obviously the key reaction low coming in at 1.0045. Which was last week's low. But the fact that the market has come back to that 101.25 pivot line is important. Backing away from that doesn't bode especially well, but it could just still be a near-term blip. But 101.25 were the old key highs from November and March, and then having broken out to the upside, that became supportive. Broken to the downside, is this now a basis of resistance overhead that is effectively protecting 102.35? But 101.25 is clearly a key level that the market is looking out for at the moment. But this uptrend, which with a bit of license, I suppose, comes in around 100.55. So again, that is supportive within the recent move higher from 1.0045. So it's an important move, that the recovery that we've seen in dollar Swissy, but is it going to fail at that pivot line is the question. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.